It's about that time of day again. Welcome to your nightly newsletter, boys and girls. My name is Joseph James. It is Monday evening, February 23rd, 2015, in tonight's nightly newsletter. Crude oil is bearish, just a little bearish, talking about a possible emergency meeting at OPEC, and it's probably not going to happen. We'll talk about that in a moment. But crude oil, very bearish here this evening, trading inside of a range. So we're going to stay patient tomorrow, looking for selling opportunities up at the range highs, and be ready to execute your breakout strategy. If you're a member of mine, you know what I'm talking about. Be ready for a breakout of that trading range on crude tomorrow. Stay to the short side, though. How about the gold? Gold is bearish, but we have a big problem with gold. We're stuck in the mud right around 1,200 on gold right now, big round number, and we've got Janet Yellen. That's right. My gal, Janet Yellen, our Fed chair, she's going to be taking the stand in the next 2 days in Washington, D.C. for her twice-a-year testimony. So we're going to keep selling on gold, and we're going to keep using that $1,200 an ounce target, but stay patient on gold tomorrow. And how about that Russell? Russell is bullish. Today's new highs on the Russell were confirmed with volume, barely confirmed with volume, so we're keeping an eye on the range highs and staying patient to buy pullbacks on Tuesday for our mighty mini Russell. As you can tell, we've got a bearish crude, bearish gold, bullish Russell. Sounds like a strong dollar to me. Sounds like a strong dollar to me. Before we begin tonight's newsletter, we get a jam-packed video for you guys tonight. I do want to remind you to make sure you're watching this video on our trading blog. There are 3 reasons why you want to make sure to watch this video on our trading blog, especially if you're watching this on our YouTube page right now. There's a link in the description of the video on YouTube. There's a link in there that will take you right to this page. 3 reasons. The first reason is you can download all of my charts that I'm going to go over with you guys tonight. All of the charts that I'm using in this video can be downloaded by following that link right below the video on our blog. The second reason to get over to our trading blog is to grab your free pass. You might be wondering, what does it feel like to be in our trade room? What does it mean to be a member of School of Trade? Okay, we have a great free trial, and we also have a free pass to give you to come out and test drive our live trade room and see what all the commotion's about. What's everybody talking about? Okay, we always like to welcome guests. If you're not a member at School of Trade just yet and you're curious, grab that free pass. Lower left-hand corner, right above my ugly mug, you'll see a spot for your name and your email. That's going to register you for our nightly newsletter mailing list, and then that way you never have to worry about missing another newsletter ever again. So make sure you guys download the charts, grab your free pass, and register for our nightly newsletter mailing list. And just a reminder, if you grab the free pass or register for our newsletter mailing list, I'm going to send you a verification email. So make sure you check your inbox, your spam, your junk, and whatever other folders might be out there to make sure you get the verification email from me. Alrighty? Helmets on, seatbelts fastened. We're kickstarting a brand new week. Last week of the second month of the year. You know, this month of February, it just flies right by. And we're going to be cruising into March here at the end of the week here. But before we get there, we got some work to do. How about this Russell? Russell is looking mighty bullish here right now. New highs confirmed by volume, barely confirmed by volume, not a lot. You can see it's almost flat. So barely here confirmed by volume. It is a rising volume with rising price. So that does confirm the move here today. One thing, though, that I want you to keep in mind is that this is that trading range that we had from last week. Now you can we kind of widen it out a little bit after seeing that drop late last week. So we've got our trading range here, and what it looks like is we might slip back down into that range and then get our chance to be a buyer down here at that 25. The one thing I don't want to see is if these buyers fail here. If we bounce off this channel low and then roll over, that's pretty much a guarantee this is nothing more than a big trading range. I'm going off the volume right now on this Russell to give me the confidence to tell you guys that we're bullish, but it's barely there, right? The volume is barely confirming. So what I'll be doing is I'm going to be looking for buying opportunities as we pull back, buying opportunities as we pull back, but I'm going to be watching very closely because oftentimes what will happen is we'll see price bounce off support. I won't get the proper entry trigger that I need to get into the trade long, and then before I can really do anything else, it just rolls over and goes lower. If we see those buyers try and fail around this 25.1, 25.1, 21.1, another shot there. But again, I am suspicious of these buyers because of this trading range. And then you throw in the fact that we got Yellen on the microphone tomorrow. We may end up just trading sideways here on the Russell until we get a little more oomph as this thing pushes higher. So a little bit less volume confirmation than we'd like on that. Just be aware of that trading range. I'll be watching for a buy as we pull back, but unless we see some good personality at that buy, I'm going to assume this is a trading range here on this Russell. If we happen to run away tomorrow morning, buy and pullbacks, buy and pullbacks, buy and pullbacks on the way up to that range expansion target. So if we do happen to go higher here without pulling back, again, you've got targets waiting for you here. Keep buying those pullbacks. And our long-term target this week will be that range expansion target up there at 1248.2. If Yellen starts throwing fuel on the fire for U.S. equities tomorrow during her testimony, you're going to see this thing cook higher here. On that Russell, we'll move to our price action chart. The price action chart is really very similar. It's a different type of candlestick. Gives you a little bit different way of looking at the chart. Russell price action is also clearly bullish here, right? We're clearly bullish. This chart, though, gives us a little bit more information. And you can see we have undershoots. We have undershoots pretty much everywhere. We have undershoot of the major channel high, undershoot of the more short-term channel high, right? So we're definitely not seeing these buyers percolating here. They're not really as strong as we'd like to see them right now. That definitely plays right in along with that volume analysis we talked about earlier. So we're trading at new all-time highs, and we want to wait patiently for price to come off these highs and then look for buying opportunities at support levels. But again, we're seeing this. There's a little bit of smoke billowing from this market right now. Where there's smoke, there's likely going to be fire. And the smoke is telling us undershoot of the highs, undershoot of the highs, right? If this is a strong market, it would have easily been able to go up, and then it would pull back, right, and give us a chance to buy here right now. So the best way to trade this right now is going to be knowing that this is your trading range. I'm going to wait for the price to pull back. I'm going to look for the buyers to slip and fall, and if they do, then you know you got this most likely going to go right back to that low of that trading range. Probably not in one day tomorrow, but most likely sometime this week of the next 48, 72 hours. Again, as it pulls back, though, I'll be watching for those buyers to step in, and if they do take this thing higher, we'll be buying those pullbacks up to that 1235. That is a measured move here on the Rusty. All right, guys, looking good here. So just keep an eye. You got some bull channels here going on, but again, knowing that we got the undershoot on this chart, knowing that we have the lack of volume confirmation, or well, the barely volume confirmation, just be aware. If you start to see things slip and fall, you know what's going on. These buyers are going to just walk away, and it will probably come all the way back down to that range low. Okay, so remember, the easiest way to do this is going to be to wait for the buyers to take a pattern here, right? So look to be a buyer as it pulls back. You're going to see it right away. Okay, you can either hop in long if you want, or what I'll be doing is I'll be looking for more than just a little bit of proof to get long. I'll be looking for the buyers to come. I'll take the next entry on it. Meanwhile, looking for those sellers to jump in when the buyers fail. If you want any real-time analysis on this, remember, I'm going over these long-term levels for you. We watch this stuff in real time every day in our trade room, so don't forget to come out and see me. Let's move forward here. So a little bit of concern there about the Russell as you dig into that chart. A little bit of smoke billowing out of those bulls, and so be aware of that tomorrow. How about the gold? Gold is bearish, just like the Russell here and crude. Gold is suffering from strong dollar syndrome right now. We have lower lows right now, lower lows in price, lower highs in price. Very obvious to see that. No problem at all knowing that we're bearish on this chart. But we have a couple things. There are two big deals Two big clues you need to be aware of. The first clue is staring you right in the face. $1,200 per ounce. This is what we've been told is the break-even point for the mining industry. It's also an extremely well-known big round number. It's going to be a price magnet. We've been talking about this for weeks. Whenever we are within striking distance of that 1200, you have to keep using that as your magnet, okay? This is one of those scenarios where, don't ask me why, just that's the way this thing works. So we're going to keep dancing as long as we're around that 1200. I'll keep, again, selling short back to that 1200 as we keep going lower. We've been doing this for about 6 months now on gold. So we're a bit stuck in the mud around 1200. And remember, tomorrow we have that 2-day testimony from Janet Yellen. And you know that gold will be the second worst market. The dollar will be the one that really is the most affected by this. That dollar will then translate into gold, into euro, and then into the equity markets. So we know we're bearish on gold right now. But that 1200 and Janet Yellen, my gal, it's going to give us a little bit of I wish it was a shakeup. It's probably going to be a little bit consolidated. It's probably going to be a little bit slow because, everyone who's a gold trader right now is going to be waiting to hear if Yellen slips up and says something about interest rates. Everyone's worried about interest rates. Okay, as a day trader, you don't need to worry about that. But if you were, managing $100 trillion for a big fund, yes, you would have to worry very much so about interest rates, right? We don't have to worry about that stuff, though, as small retail traders. So Janet Yellen tomorrow is going to most likely cause gold to be a little bit sleepy and sideways, a little bit of analysis paralysis. People will be a little bit gun shy on gold until we finish up with her. My plan on gold is to keep letting price go up, keep selling it back down, up, back down, up, and back down. What about if we go lower? If we go lower, I'm just going to keep selling short because we are bearish here, and I've got my measured move targets, as you can see, waiting for me. A to B, C to D, there's your big one. A to B, C to D, there's your smaller version of the measured moves. Okay, so bottom line is we're bearish. I will stay to the bear side right now. I've got 3 zones overhead. All I need here are those proper entry triggers to the downside, and I'll use 1200 as my price magnet. And again, if it doesn't go higher, if it just goes lower, keep selling retracements on the way down to those extension targets listed below at 85.2 and 78.2. Guys, again, I don't see this gold being able to break free of this 1200 too much, right, in the next 48 hours, just because we have Yellen here. And again, if you're managing a lot of capital for other people, you're going to have to deal with the fact that she may say something about interest rates, and you've got to be paying attention. All right, so beware out there if you're a gold trader. Gold price action, we have kind of a lot of the same stuff on this chart, but there are a couple different types of clues that we get on the price action chart of gold. Lower highs and lower lows. Lower highs and lower lows combined with a strong US dollar. That's what's pushing this gold lower right now, and what's keeping it stuck in the mud around 1200 is our good friend Janet Yellen. Okay, so price will most likely continue to go lower, so keep waiting to sell at those highs. Here's a couple really good clues on the price action that we're going to most likely be stuck in the mud here on gold for at least the next 24 hours. First of all, you start down bottom of this larger channel, and we have an undershoot. So you can clearly see the sellers were not strong enough. They weren't even interested in finishing the job they started. Okay, so that long-term channel down, you can see that undershoot. So we can't actually hit the low of that channel. That tells me those sellers were weak. You can see they really fought for it right there around 1191, and then price goes higher. Follow the bouncing ball. We go up, we overshoot. Overshoot? I thought we were bearish. Yeah, exactly. It's almost as if the sellers started taking profit on it, right? Which is what caused the retail traders start buying it. Once, twice, we get the overshoot, then we get the overcorrection. Guys, we should be heading higher here. We should be moving higher, right? We should be retesting that 1209.2. I mean, look at the overshoot. What is that telling you? So what should have happened here, those bulls, they should be here after that channel break to hit that 1209.2. You can see we get a little bit of bullishness to it, but very, very muted, very mild here. So from what I can see right now, it doesn't appear that anybody really wants to take this baton and run with it right now. So the best way to play it right now is I would stay to the sell side because of the long-term trend we have right now. And there's probably a better likelihood tomorrow that Janet Yellen says something positive than negative. Okay, we don't say that very often, but tomorrow's at her testimony, it's a little more likely that she compliments the strength of the economy more than talking about what she doesn't like. Tomorrow she'll probably talk about the fact that we have a very strong economy here in the U.S. right now, but she'll definitely mention the concerns about Europe, the concerns about Asia and the emerging markets, right? Because of that strong dollar that we have right now, a strong dollar makes it a lot more expensive for other countries to buy our goods and services. So it's seen as being a bad thing if you're talking about GDP. All right, remember, the federal government in the U.S., the Federal Reserve Bank in the U.S. has a very different goal in mind than the average consumer, right? The average consumer loves a strong dollar because everything's cheaper, right? Everything's easier. We can save our money now with a strong dollar. But our Federal Reserve Bank says this is a global economy. It's a race to kill your own currencies these days. That's pretty much what it is, right? Because a weak dollar means that we can now ship all of our products and services other places in the world where they have emerging economies and they have the demand for that stuff, especially in Asia. But with the strong dollar, they can't afford it. So it's good for us on the homestead, but again, you can just kind of see why they want that weak dollar, right? That's why we're really back and forth here with the economists on that topic. So again, use 1200, use it as a target, wait for price to go up, sell the high, wait for price to go down. I wouldn't buy, but if you're a little bit aggressive, you could probably buy it and bring it back up. I'm not going to use the buy button on gold right now until I get a little bit different tone than this. Okay, so be aware there on the gold. Shall we wrap up with crude? Now, crude oil is pretty darn bearish, right? Not to toot our own horn, but we called that whole entire drop, guys. We called the whole thing. In fact, we called it well in advance. Plenty of time to position yourself into it. We called the whole drop last week. It was a really great week for us, and I hope you guys are going to make some money. It sounded like most of you guys are going to make some pretty good money with us, whether you remember or not. So crude is bearish. We're trading inside a range, and that's going to be a very consistent theme here. This trading range is going to be very, very important. So stay patient, keep an eye on that range, and be ready for breakout opportunities. Don't forget, I teach 5 different ways to trade breakouts. I actually even teach those in our free trial. So join the free trial, and you'll see exactly how I trade breakouts. So we're staying patient. We'd be foolish right now to be a buyer right now. I mean, heck, we heard from OPEC today. Funny how none of the large OPEC countries are saying anything right now, but all the smaller countries are saying lots of things. They're calling for an emergency meeting. Yeah, not going to happen. We already know what's going on here. The strategy is do not confuse this, guys. Turn off the television and pay attention here. The strategy is very simple. The large OPEC nations are purposely not manipulating supply so that the price will drop, shake out all the small producers, and then allow the big OPEC nations, the big oil producing nations, to then choke off supply and drive the price back up. Okay? It's basically the Walmart strategy. Put a big box store in a small town, drive the prices lower, take a loss on those lower prices, enough so to drive all the small mom and pop shops out of the local economy, and then what do? They hire everybody there, they jack the prices up, and what are you going to do? All that left is Walmart. It's the Walmart strategy applied to the black gold. Here's the problem with this, though. They better act fast, because I know that right now there are people very smart, very intelligent, very well capitalized, and very resourceful people And if they can figure out how to make a profit at $40 a barrel, bye-bye OPEC. See ya. Nice knowing you. You've been cranking these prices up for 30 years, and their time appears to be right now. This is go time. This is go time. And for everybody out there on those small farms in northern U.S. in the emerging markets, keep working at that, because that's what will be the demise of that cartel that's been purposely manipulating supply and demand to increase their checkbook. And I love the Saudi Arabian oil minister. I really like him a lot. I have a lot of respect for him, because when he says, what would you do? If you were in their shoes, you would do the same exact thing. Gotta love a free society. Gotta love a capitalist society, right? Take advantage of it if you can. But it's now up to the small producing nations to find a way to make money at lower prices. And if they can't, they need to die like any other business that does not succeed. Okay? It doesn't require anything else. So the bottom line right now is that nothing has changed. We've seen time and time again the buyers have tried to come in. OPEC keeps coming in and trying to spark some fear. And I swear people are just selling right into OPEC news now. Okay, so do not believe what you see on television right now until you hear the oil minister from Saudi Arabia. All right? Because the Saudis, they could literally bathe in crude oil for the next 10 years and not have any worries. They got plenty of it. It's the small nations that are beating the fear drum right now. So don't listen to that right now. Listen to the chart. We continue to see the buyers try. I love it when people say, oh, they're accumulating. Really? This is accumulation? You got it. Let me know how that goes. I'll see you at 40. But I'm sticking with my $40 a barrel prediction right now. I would anticipate $40 a barrel in the next few weeks here. The way it's been going, it just does not look like we're going to have much more. Now, we have this range. Sell the highs of this range. Sell the highs of this range. So get the thoughts out of here. What does the chart tell me? The chart tells me lower lows, lower highs. I got no reason to be a buyer right now, but I do have this trading range to worry about. So as the price goes up, I'm going to sell it. As it goes up, I'm going to sell it. As it goes up, I'm going to sell it. As it goes up, right when everybody's saying, see, I told you. Yeah, kind of like over here where you told before. Right, how'd that work out? Yeah, back to 50 again. Called that one a mile away. I hope this thing goes higher here tomorrow. Give me a better price to sell this sucker on the way back down. Okay? Don't buy into the hype. As price goes higher, sell it. And you got a great opportunity here for some measured move targets down at 47. Okay? Down at 47. We had projected today in our trade room all the way down to 46. This is looking a little bit more accurate, though, at 47. Okay? May not happen in one swoop. We're going to wait for price to go up and then sell it. Most important thing, though, I see right now is this range. If we go higher, sell the highs. Go higher, breakout trap. Go higher, breakout fade. Go higher, breakout fade. Exactly what we did on gold last week. Go back and watch last night's newsletter, last Thursday's newsletter, and you'll see exactly what I'm talking about. What if it just rolls over? If it rolls over, be very careful selling this low. Don't sell that low. If it rolls over, breakout retrace, right? If it rolls over, breakout retrace. Whatever you do, don't sell that low. Don't sell that low. Professionals like me are going to be waiting there to take your money, guys. Okay, don't sell that low. Remember, what comes easy to a human is the wrong thing to do as a trader. So wait for some other poor sucker to try to make the breakout happen. Breakout retrace. I want a clear test of that low at 48.70, and then we're possibly all the way down to that 47.10. Wouldn't take much. We saw a $3 drop this morning before we even opened up shop in the U.S. So the trading range is the most important thing that I see on this chart right now. State of the bear side here on the black gold. And then, of course, wrapping up here with our price action chart. Crude oil price action, very bearish here. Very bearish. No question at all. We're inside a trading range. The only reason why we went higher today was because of that $3 drop early in the European session, right? I mean, what do you expect, right? We're going to have some profit taking. We're going to have some bargain hunters. You can see there's quite a bit on this chart. There's quite a bit of analysis that's worth mentioning on this chart. Again, I personally believe the trading range is the most important clue, okay? The trading ranges are going to have a lot of opportunities around these trading ranges. In fact, I should have put this down here, that should be sell, retrace. Again, you don't sell the low, you sell the break and the retracement back to that, in this case, 49.09. So look for selling opportunities at range highs and be ready for the breakout opportunities. So again, as price goes higher, now look at this little guy right here. We got this little midline, not really a midline, so to speak. You know, midline would kind of insinuate a half, and half. But, you know, it's definitely some resistance overhead. And then look what we have here, too. We have a little bull channel. Ugly as all ugly, right? That's the ugliest bull channel I've ever seen. But you notice the midline of that channel lines up right there, right? So that looks like a pretty tasty little area there to look for a short. So as the price goes higher, I would definitely be looking for a sell around this, I don't know, what is this area here, 50-20 area. It's tough to say where that's going to happen because it may be in the future. So again, 50-20, I got to sell up at the range highs. I've got to sell up at the major channel highs. I have a sell up at the range expansion highs. I have a sell. And then, of course, if we do get a chance to sell those highs, take your profit at the lows, target at the lows, target at the swing low, and then the big, juicy, pay me my money target down here at 47.77. That's where the bears are going to be shooting for right now. That's definitely where the bears will be shooting for it, and it just so happens to be down near the low of this major bear channel. Coincidence? I didn't think so either. No, definitely not a coincidence. So stay to the bear side here on crude right now. Stay to the bear side on gold. And again, I would be a little bit suspicious of that Russell. And like I said out there to all those small farmers around the world, get to work. Get to work. If we can figure out how to make money on this low price, this whole world changes. What amazing opportunity we have as individuals in this world right now. I don't care what language you speak. I don't care what demographic you come from. I don't care who you are, where you are, what you do. We are looking at a paradigm shift around this world. And if you don't smell opportunity, wake up. We have a huge opportunity right now, and any business opportunity around the world. It's pretty remarkable. It really is. We've known this for a while, right? We've known that after that whole debacle of the credit crunch and the real estate, right, and the whole global recession, we knew there would be a new normal and that the baton would be passed, and we're seeing it right now, right? Look at the big picture. The world is such an exciting place right now. So hopefully, guys, you're with me on this. If not, that's okay. I understand it can be a scary place out there. It helps to turn the television set off and look at the charts. They tend to tell us what the reality is. Wrapping things up, though, I want to thank you so much for being a part of my newsletter today. Awesome work last week. Hope you had a great weekend. It's time to get to work, though, now. Don't forget, grab your free pass, download today's charts, register for the nightly newsletter mailing list, and if you happen to stumble over here to SchoolOfTrade.com, don't forget, we've got 3 levels of membership, beginner, intermediate, and advanced. I've got a free trial that ain't nobody's got a better free trial than we do here at School of Trade. Don't take my word for it. Make me prove it to you. Register for the free trial. I will not waste your time. You'll learn a lot more about how I trade in there. And don't forget, guys, I got someone standing by 24/7, 365 to give you a hand. Alrighty, so keep in touch. Now get out of here. Be well. Be nice to each other. And make sure to come out and see me tomorrow morning in my live trade room, all right? And then we'll see you guys tomorrow. Want to do it again? Absolutely. Same time, same place tomorrow, guys and gals. Have a great evening. Stay warm, stay dry. We'll see you tomorrow. Adios, amigos. Bye for now.